Overpaying taxes in Denmark is more common than many people realize, and understanding how it happens, what to look for, and how to correct it can have a meaningful financial impact. In this video, we will walk through the key reasons Danes overpay tax, the most important elements of your annual statement to review, and the practical steps you can take to ensure you are paying exactly what you owe, no more and no less. To start, it is important to recognize that the Danish tax system is largely automated and generally efficient, but it is built on the information that you, your employer, financial institutions, and other third parties provide. Whenever that information is incomplete, outdated, or incorrectly reported, the result can be an unnecessary tax bill. This is particularly relevant if you have experienced changes in your life or finances, such as moving jobs, taking on a mortgage, starting to invest, working cross-border, or receiving various forms of benefits or allowances. Each of these situations can create discrepancies between what the system assumes about you and your actual circumstances. One of the most frequent causes of overpaid tax arises from mismatches in your preliminary tax assessment, the forskudsopgørelse, which is essentially the tax authority's estimate of your income, deductions, and allowances for the year ahead. If this estimate is not updated when your situation changes, for example, if you start earning a higher salary, or conversely, if your income drops, your withholding rate may not align with reality. In some cases, this means you underpay and face a bill later, but in many others, it means you systematically overpay throughout the year. Regularly updating your preliminary assessment is therefore a critical first line of defense. Another major driver of overpaid tax is unclaimed deductions, or fradrag. Denmark offers a range of deductions that can materially reduce your tax burden, but they do not always appear automatically on your annual statement. Typical examples include interest on loans, union and unemployment fund fees, commuting costs for longer distances, certain types of work-related expenses, and contributions to pension schemes beyond what your employer reports. If you pay mortgage interest or consumer loan interest, it is essential to confirm that your bank or lender has correctly reported these figures. The same applies if you are part of a professional association or AKAS. The fees are often deductible, but only if they are accurately captured in the system. Furthermore, if you commute a significant distance to work, you may be entitled to a commuter deduction, but the calculation depends on precise information about your daily travel. If you do not check and input this, the deduction can be missed entirely. Investments introduce another layer of complexity. Many Danes now hold securities, investment funds, or shares, and each of these can have tax implications that are not always straightforward. If your bank or investment platform is Danish, much of this may be reported automatically, but even then, errors can occur, especially if you have multiple providers or more complex portfolios. If you invest through foreign platforms or hold assets abroad, reporting is often not automatic at all, which means that failing to declare correctly can either create a risk of underpayment or, if reported incorrectly, can result in excessive tax. In cross-border situations, such as if you live in Denmark but work partly abroad or have income from foreign pensions, rentals, or investments, double taxation agreements become relevant. These agreements are designed to prevent the same income from being taxed twice, but they only work properly if you carefully declare the income and claim the corresponding relief or credits. If you do not, you may pay full tax in Denmark despite already having been taxed abroad, leaving money on the table. Turning to the annual tax statement, the årsopgørelse, this is where you can concretely see whether you have overpaid or underpaid for the year. When it becomes available in March, it is not just a document to glance at. It is an opportunity to verify every key component. You should review your reported salary, any bonuses, benefits in kind, such as company cars or free phones, interest income and expenses, pension contributions, and all deductions. Pay attention to whether your personal allowance and employment deduction are applied correctly and whether there are any unfamiliar or seemingly incorrect entries. If you identify that you have overpaid tax, the process to correct it is relatively straightforward if you act within the standard revision period. In most cases, you can log into the tax platform, adjust the relevant figures, and resubmit. The system will recalculate your position, and if a refund is due, it will typically be paid out automatically to your bank account. There are statutory deadlines for making changes, so it is important not to postpone the review for too long. If substantial amounts or complex issues are involved, especially around foreign income, business activities, or intricate investment structures, seeking professional tax advice can be worthwhile to ensure you are fully compliant while avoiding overpayment. Beyond individual actions, there are a few structural habits that can significantly reduce the risk of paying more than necessary. First, schedule a brief review of your Forskuddsopgjørelse whenever a major change occurs: new job, new loan, change in working pattern, or relocation. Second, keep digital records of major deductible expenses so that you can easily compare them against what the tax system shows. Third, if you are investing, understand the basic tax rules that apply to your products, whether gains are taxed as capital income, share income, or under special regimes, and confirm that your provider's reports match your own records. Finally, maintain a simple annual checklist: income, deductions, allowances, and cross-border elements to ensure each area has been considered rather than assumed. In closing, while Denmark's tax system is designed to be user-friendly and largely automatic, it is not infallible. Overpaying tax often happens quietly, through missing deductions, outdated assumptions, or overlooked details. By proactively managing your preliminary assessment, carefully reviewing your annual statement, and taking a structured approach to life events, you can significantly reduce the risk of overpayment and ensure that your tax position accurately reflects your real financial situation. If needed, do not hesitate to engage with tax authorities or qualified advisors. In many cases, the potential refund and peace of mind will more than justify the effort.